Hello and good afternoon or good morning, whatever. I welcome you to today's morning meeting here exclusively for JFD Brokers. My name is Jens Klatt and I'm exclusively presenting this format to you as the Global Head of Research and Education today on Wednesday, the 21st of March 2018. It's the day of the Fed and so all in all, we don't get to see much action right now. So picture hasn't changed dramatically since yesterday. Nevertheless, we want to have a short look at least at what to expect. In fact, what to expect is also not so spectacular. If you look at the Fed Watch tool, you can see that the market is already pricing in with nearly a 95% chance that the Fed will hike rates tonight, by 25 basis points. And it's not just that they will hike rates today, but it's also nearly a done deal somehow that the Fed, that the Fed will here hike rates then again in June. As you can see here, this is the Fed Watch tool from the Chicago Mercantile Exchange. 1 second. So here, this is the current level we're right now at with rates at 125 to 150 basis points. Then here, this is the level we expect the Fed to hike rates to today, and this is the level then in June. You can see here already a probability of nearly 90%, 85% that they will hike rates a second time 2018 in June and also in September. What you can see is that here there's a chance of nearly 60% already priced in that such a rate hike will occur. And even in December, even though it's not more than 50%, with very close, it's already over 40%. What you can see is that the Fed here is expected to hike rates not just 3 but probably 4 times. And this is the main question. In fact, it's not about do they hike rates today. This is a done deal again. But what's more interesting is to see whether there will be 3 more hikes then. So not only 3 hikes in 2018, but probably 4 rate hikes. And based on the comments from the new Fed Chairman Jay Powell, who has his first rate decision today, based on his comments in front of the US Congress in February, when he gave his semi-annual testimonial here, I somehow think that there's a good chance that there will be 4 hikes in 2018, and that this is something which can be heard here between the lines. And now this is probably the main question, which is interesting for us as traders, what to expect from the market. And this is exactly the problem right now. So for example, when looking at the equity market, so here we have the Dow Jones. What you can see is the Dow Jones is presenting itself very unspectacular after some volatility on Monday. Yesterday was not really spectacular, and today isn't too. So not even one small bigger move in European equity markets. So there was a small push on the downside. We will have a look at the DAX in a few minutes here. You will see it's nothing spectacular. Right now, the DAX is trading back towards its opening price. And yeah, all in all, the overall picture is very unclear, and market seems to be really calm right now. The question is it calm before the storm? And why is the market calm? Since what we can also see, and that's something I just illustrated, is the market already expects a rate hike, and it's already a done deal somehow what will happen in the future here. So why is the market behaving in such a calm way? And I think the main reason for that is because we do not really know in which direction we should interpret such a step from the Fed, respectively, in which direction the rhetoric will go here from Jay Powell at then 6:30 p.m. GMT tonight. The thing is that everything which is indicating positive and strong momentum in the US economy, and which justifies hiking rates, which are usually expected to have a bearish outcome then for equities, since hiking rates is usually something, especially if you look at the discussion around potential tariffs here, which were made a topic around 2 weeks ago from Donald Trump here to protect the US economy and to put America first. The thing is that the combination, hiking rates and protectionism, is usually something which is very, very bearish for equities. If now the Fed comes out and delivers a positive outlook for the US economy, the short-term, at least the short-term reaction could be bullish for equity. So meaning that, for example, the Dow Jones could see a push on the upside, respectively the S&P, which has seen some stronger moves yesterday too. So yesterday was a very, very unspectacular trading day, very, very slow, very dynamic, less action here, which we have seen. And yeah, so all in all, for equities, it's very difficult to say in which direction the move will come finally. Somehow, I want to be honest, somehow I have the feeling that there's probably a good chance, a realistic chance, that there will be a push on the upside, even if there's a more restrictive tone here with the Fed. But it's just a feeling, it's a gut feeling. Right now, in fact, it's like tossing a coin. It's like I don't really know in which direction we could see some momentum. What we get to see right now definitely is something we have seen yesterday already. Have a look here. What happened yesterday? The first hours of trading, we saw some pressure building. The DAX saw some losses, then recovered into the afternoon, and then headed higher and closed in the region around its daily highs here, and significantly above 12,300 points. Could be at least that we get to see a very similar move now with a push back towards the daily highs and then a stabilization around this level here, around 12,360 points. Probably this untrue gap from Monday will be closed here with the market, the DAX in this case, making it up to 12,400 points. But all in all, I don't think that we'll get to see strong trending moves before the Fed. So now probably there is some further momentum on the upside to be expected. Market will probably stabilize at an elevated level then if it can continue its recovery here, similar to yesterday. And then we wait for the Fed, and then we'll just see in which direction the Fed will deliver their statement. Everything which makes or gives the US economy a positive outlook is something which could drive equity prices higher. On the other hand, even if you see a more dovish stance, and probably the Fed, even though I think it's unlikely, but if they make also only 3 hikes in 2018 a topic and give not such a positive outlook for US economy, at first glance, you would say, hey, this is positive for equities. I think that equities could see a very sharp drop if such a statement really hits. So all in all, again, it's like tossing a coin. I really do not know in which direction the Fed statement will deliver action, if it will deliver action at all. And probably then it's just the best to step back, wait till the Fed delivered this statement, and then let's see from there in which direction we can position ourselves here. All in all, let's have a look here at the DAX from a pure technical side. If we continue this move from yesterday and we really make it to 12,400 points, and the Fed delivers something which is driving US equities higher and also pushing the DAX a little more on the upside, next target could be found then around 12,400, 12,500 points. We break above that. Tomorrow, respectively, to Friday, we have a good chance to probably make it up to 12,600 points. But again, let's just wait and see in which direction here the market will see an impulse, if it sees an impulse at all. Same is true, by the way, for the currency markets. Very, very choppy, very, very unspectacular trading. Also in EURUSD, for example, no big surprise. We're still trading within this range. I made a topic already yesterday. Even though yesterday was some pressure building, we dropped below 123. Now we can recover some of these losses. But all in all, the picture still stays really unspectacular. I'm not even sure whether the Fed really can deliver something which will push the DAX, the EURUSD out of its range here. Probably if they come out more restrictive, and if this goes hand in hand with a positive outlook for the US economy, and especially 10-year treasury yields probably see a spike towards at least 3%, I could imagine the US dollar to probably gain some momentum then into the evening, and a more aggressive attack at the region here, 121.70, 122.20. So all in all, 122 if you want. But nevertheless, we have to wait if really such a break occurs. And in fact, the same is true for the upside. If there is some dovish stance to the statement from the Fed, and this results in the US dollar index here to attack the region around the current March lows, around 89.30 around here. and we break below that level, there's further pressure to be expected, which could drive us as low as 88 towards the yearly lows, which then would go hand in hand with a push in the DAX and the EURUSD on the upside. So yeah, also here, let's just wait and see. The same is true for dollar Japanese yen. Well, no big surprise. Yesterday we've seen some bullish momentum, even though no significant break of a significant technical level. Instead, we are still trading below 107.50, 108, and above 105, 105.50, which is in midst of this range, a neutral picture. Probably again positive outlook for the U.S. economy, and 4 rate hikes to be expected in 2018, with the first coming today. Well, then it's a good chance that there will be a push towards and above 107 here. Then dollar yen could see some nice intraday trends on the upside. Same is true for the downside. If anything negative is mentioned here from the Fed in their statement from Jay Powell towards a journalist here, and when answering to a question from a journalist, any skepticism around U.S. economy, driving yields lower, whatever, is capable of pushing dollar yen lower. But also here, it's like tossing a coin. It's like you don't really know in which direction the impulse will come. Same is true, well, surprise, surprise, for gold. Also here, my overall outlook, I want to be honest, my overall outlook is bullish for gold, mid to long term. It has to do with the fact that we still see a flattening in the US yield curve, 2 and 10 years. Thing is that here, this is something which makes the impression that there is a recession forming at the horizon here, which is usually a good sign for gold, even though something positive for the US economy and rising yields could push gold as low as 1,295 to 1,300. So it could be that there will be a push on the downside, but I'd carefully watch this level here, since I think that this is probably a good region to look for long engagements. The overall picture here doesn't look that promising anymore once we fall below 1,235 USD per ounce, so the lows here of December, and that's a quite long way to go, and something I don't really expect to happen within the next days. Could happen, yes, but I don't see it, to be honest. But also here, let's just see what's the short-term reaction to the market here, to gold in this case. The only probably very interesting currency pair is still pound sterling, which has seen yesterday UK inflation coming in below expectation and pound sterling being under pressure. Into the afternoon, we've seen some momentum in the US dollar that drove prices in pound sterling lower. And we retested this breakout level from Monday here around 139.80 around. I've obviously found a long trigger. So today's employment situation showed some positive signs here, and this is right now pushing pound sterling higher. Probably there's another push higher towards 141, 141.50, and also a break above that level if the Bank of England comes out more restrictive tomorrow at their rate decision. And that said, obviously, when I'm looking for when I'm really looking for US dollar strength, let's say, I'd definitely do not trade the greenback here against pound sterling, since I consider pound sterling compared to euro, for example, to be quite strong right now. And the same is true if something bad happens, let's say. Bad happening meaning that nothing more than that the US dollar loses some ground and is down talked again in the evening, or sees some pressure building because of a very loose tone here from the Fed in their statement, whatever. Then currently, the pound sterling looks to be the best candidate here for long engagements then against the US dollar. That's definitely something worth noting and to keep in mind here. And again, if the Bank of England comes out with a more restrictive approach tomorrow, and with a tendency showing that there will be a rate hike, most likely within the next 3 months till June, this is something which could drive pound sterling higher, definitely, and leading to a significant push back above 141 here. And that's it from my end. So watch your stops, and be careful around the Fed tonight at 6 p.m. GMT. I I wish you all the best. Happy trading. Watch your stops, and tomorrow at 10:30 a.m. GMT, we'll have a look at what the Fed delivered. Let's see if we get to see some dynamic in one or the other direction. I'm definitely looking forward to it. Yeah, stay tuned. Take care. Talk to you again tomorrow. I look forward to it. See you, and bye-bye.